You want to buy a home, but you don't want to deal with those higher interest rates? Look, I get it. Despite a lot of noise about the Federal Reserve lowering the interest rates recently, the fact remains that rates are currently much higher than they were just a couple years ago. The average rate today is around 7%, and even though they're expected to be in the low sixes throughout most of 2025, many people are hanging on to the idea of getting that 4% or even that 3% rate again, and I'm here to tell you that's likely not going to happen anytime soon. And actually, over 1/3 of homeowners will be motivated to make a move if rates move just below 6%. That's according to a recent study from bankrate.com. And when this happens, there will be a lot more competition from other buyers out there, which are probably going to drive the home prices way up again. Well, lucky for you, there is a way to get that 4% interest rate even today, and that's through an assumable mortgage. Assuming someone's mortgage with a lower rate can save you thousands of dollars over the course of your loan, but the process can be a little tricky. So that's why today I'm sharing how you can assume someone's mortgage in just 3 easy steps. Number 1, have your agent find the list of potential mortgages. Your agent has access to tax records and mortgage information that will allow them to find out which homeowners in the areas they're interested in purchased their house when rates were lower. So they can create a list of mortgages in this area that you'd want to assume, and from there, you just need to confirm that the seller's mortgage is actually assumable before going forward. For example, most VA loans are assumable, but most conventional loans are not. You also need to qualify for whatever loan you are planning to assume. So make sure you work closely with your agent and your lender to ensure you have a list of quality leads. Actually, you're going to be working with the seller's lender. In our office, we have a proprietary spreadsheet that one of our agents came up with. It's brilliant. And we have successfully put together many deals now for our buyer and our seller clients for assumable mortgages. Number 2, negotiate a deal that works for everyone. If a seller lets you assume their mortgage, they're probably going to want something in return. And as long as you're working with a good agent, this can work out good for everyone. For example, the seller that you're making an offer on might ask for a higher price, but you're still going to get that 4% interest rate. And this is going to end up saving you a ton of money. Number 3 is just be patient. It's exciting to find an assumable mortgage with a lower rate, but you still need to be patient because it can take at least 2, maybe 3, 4, 5, 6, 7, 8 months for this loan to close. And the lender needs to make sure you qualify before moving forward. The seller that you're working with needs to be on board. They need to be patient as well. Sometimes it just doesn't work out because the sellers need to sell quickly, and that's not going to happen. While finding an assumable loan with a lower interest rate can be tricky, it can end up saving you just a ton of money. So it's something that you should consider. If you're interested in this option, give me a call or shoot me an email. We'll send you a list of potentially assumable mortgages in the areas that you're looking at.